Welcome, folks. Um, this is the market review for gold. So today we had this run to the downside, taking out these lows, as you can see, and traded inside these inefficiency. So today it was quite simple. This is how you could have framed this entry from this fair value gap right here, and targeting maybe this gap or these lows right there. Yeah, so as you can see, this was yesterday. So this is we're still in this dealing range. So what you do, you anchor your fib, the low to the high, to that high right there. So this is the midpoint of this dealing range. So this is a premium, and this is a discount based on this price range. So as you can see, price went to premium. What was at the premium level, we had this gap at this time. This was around 4. So that's in between the 2 to 4, or to 5. You can extend it. So we had that. So we had this run. Also we had this denotes the liquidity void on a daily chart. So we extend it through. That would always act as a magnet. As you can see, price is meandering around that level. So while we are up here trading to the downside, our targets would be, you can target this inefficiency and these lows. Eventually these are relative equal lows. So we had that. So this is the way you determine which fair value gap to use and which fair value gap not to use, which one to use as a inversion fair value gap, because some will be used as inversion fair value gaps. So this fair value gap is at premium. These are premium PDRA. It resides on a premium level based on this price range. So yes, we had other inefficiencies, but time again is a factor. And then we had a clear buy side above this high. So we took out that high, traded inside this inefficiency, and then we had this run to the downside. So if we head over to the 1 hour chart, let me show something. We had this inefficiency right there. So we extend it through. So we traded into that. Price was trading just below the midpoint of that inefficiency. So this is based on a 15-minute, but you can anchor it to also fit into 1 hour fair value gap. So any of those, you can use any of those. Nothing is wrong with that. So get rid of this. So your targets are always, if you're in a premium, you're targeting a discount. So if you are to go short right here, our take profit will be at the midpoint of this range right here. So you take again your fib, anchor it to the low, to the high, whichever, then up to that point. As you can see, this is the midpoint. We traded into a deep discount. what was into that discount. We had these 2 consecutive candles. We had these fair value gap. So this is an order block and a fair value gap. So that is quite strong. So you extend that through. As you can see, price reacted off of that and pushed price to the upside. So as you can see, we had this volume imbalance right there. So as you can see that gap, so that will be a potential drawn liquidity. So you could be targeting that down here. So this also qualifies as an ICT New York open kill zone. So you're targeting the discount, whatever is below this line, either a fair value gap, an order block, that's your target, or even such lows, as you can see. So we had that run, taking out all those lows and eventually trading inside this order block and inside this fair value gap. So we had that, then we had that push to the upside. So if you go into the 1 minute chart, see how those entries would have been. So as you can see, there was no candle close above the upper half of that inefficiency. So we had that. So this was right at around 440. So we had this drop to the downside. We had a fair value gap as price was trading inside this fair value gap right here. See, as price was trading inside this, it could be going short right in that. We had a volume imbalance right there. So shorts would have been, let's just stop just above that high, just above the midpoint of this inefficiency. And then your targets would be this line, which denotes a discount at a premium. So even if you were to aim for that was an 8.11 hour trade, which is enough. For that day. So we had that, but we also accelerated to the downside. As you can see, if you held on, could have held on that, this would have been crazy risk to reward, which is yes, 12.01 risk to reward. So that was quite profitable. It was a nice day. So even this trade, we are in a discount. We traded inside the order block. Let me delete this. We traded inside the order block right there. We had here we had a shift in market structure. As you can see, these are swing high. We traded, then we came back. It left us a fair value gap, a very small fair value gap. We had also this as an inversion fair value gap, so we could be going long that, placing your stock below these lows, and then you're targeting these highs. So if you are to trade this is at around 952. So this is always based on the New York time. So these are 3.8 risk to reward. So we had that run right there. Yeah, so I guess that's it for gold. Until I see you next time, be safe.